This latest trouble in the financial market started overseas, where we have Liz Palmer in London.
In August, when all Europe traditionally takes a summer vacation, only a crisis could keep the politicians at work, and they've got one. Today, Italy's Prime Minister Silvio Berlusconi announced an emergency meeting of the G7 finance ministers. It's an obvious effort to steady near-panicked markets.
I think this is one of the concerns that the market has always had about the European debt crisis. It's always seemed to be a couple of steps ahead of the politicians, and it just mushrooms out of control very quickly.
It has looked out of control since Monday. And by Friday evening, European markets had posted their biggest weekly decline in nearly 3 years. All over the Eurozone, there are worrying signs. Overnight in Spain, for example, angry crowds fought with police. Their complaint? Unemployment. Among young people between 18 and 25, it's a staggering 45%. Apart from Germany, which remains a powerhouse, Europe's economies range from weak to dangerously crippled by debt, with some investors worried that Spain and Italy could actually default, sending shockwaves across the Atlantic.
So Europe sneezes, America catches a cold?
That's absolutely right, I'm afraid. And this is the first time that we've actually seen the US be more than, in fact, deeply concerned about what's going on in Europe. And the European sovereign debt crisis is indeed very, very serious.
So serious that both the French and German leaders spoke to President Obama today. They're hoping that a united political front that looks serious about tackling that debt will restore some confidence to the markets before they open on Monday. Scott?
Thank you, Liz.